Rocket Lab closing at new all-time highs, fueled by progress with their Neutron rocket, especially after it signed a contract with Bollinger Shipyards to build a 400-foot ocean landing platform, named Return on Investment, which is expected to be delivered in early 2026. The platform will be fitted with Rocket Lab's technology to support rocket landings at sea and will play a crucial role in the company's plans to serve larger payload missions beyond small satellite launches. The Neutron rocket is expected to debut in the second half of 2025 and will have the capability to deliver payloads up to 33,000 pounds. In the meantime, price can still rise to the mid-40s prior to reaching the intersection of the 1.618 fib extension, 8 fib time zone line, and upper boundary of the already steep channel. A natural pullback is likely here. As long as price keeps above 32, the larger uptrend is fine. As long as it stays in the channel, the steeper trajectory will be maintained, likely sustained by government demand that could see more contracts in the near future, possibly even taking some market share from SpaceX given Elon Musk's recent falling out with President Donald Trump, in which case roaring through the 50s by the end of the year would be quite realistic. Speaking of government demand, Unusual Machines saw an unusual influx of buyers amid increased interest in drone stocks following news of government initiatives to boost domestic drone production in order to reduce reliance on foreign-made components, which is why Unusual Machines' acquisition of Rotor Lab in an all-stock deal valued at $7 million is such a big deal. Rotor Lab is an Australian developer and manufacturer of electric motors and propulsion systems for drones. Rotor Lab is known for its high-performance motors for commercial and defense drone applications, and the two companies have been collaborating for nearly a year. The acquisition will see Rotor Lab's existing facility in Canberra, Australia, remain operational, while Unusual Machines' new U.S.-based motor factory in Orlando, Florida, is set to begin operations in September. TMC, the metals company, has surged onto center stage due to President Donald Trump's executive orders addressing the nation's supply of critical minerals. This is despite the fact TMC is still in the pre-revenue phase of development. The company is working towards collecting nodules on the seafloor to produce cobalt, copper, manganese, and nickel, with the U.S. recognizing all but copper as critical minerals. Further support comes from Trump's executive order in April, which asserts the nation's policy to advance U.S. leadership in seabed mineral development, something that's been enough to temporarily quell concerns about uncertainties in deep-sea mining, with the International Seabed Authority still reviving negotiations on deep-sea mining controversies. Back to drones with ZenaTech, which has promptly rebounded from a gap fill, helped out by a renewed push for drone technology in defense, particularly following supportive policy directives which view drones as expendable assets, ones that can be sold directly to U.S. military field commanders without needing traditional UAS certification. The company plans to accelerate manufacturing efforts to meet urgent demand. Since drones are now up for rapid field acquisition, ZenaDrone can deliver drones directly to frontline units without bureaucratic delays. Not to mention, early-stage drone versions can be purchased and tested in operational contexts, leading to experimental formations tailored to small UAS by September, as well as the drive to equip all squads with low-cost expendable drones by the end of FY 2026, and fully integrate UAS into major training events across the Department of Defense by 2027. Next, GEVO entered into a tax credit transfer agreement with a bank to sell up to $22 million worth of clean fuel production credits from ethanol production in 2025. The deal provides near-term funding while preserving shareholder value without issuing equity or debt. GEVO will deliver the credits to the bank, with $5 million worth of credits transferred immediately, and the remaining credits scheduled for delivery by December 10, 2025. The bank has also obtained additional rights, including the right of first offer for up to $20 million of extra 2025 credits, and the right of first refusal on all 2026 credits. This agreement is expected to strengthen liquidity position and validate credit market demand. Meanwhile, GEVO's RNG subsidiary closed $40 million in new bond sales, refinancing debt and increasing balance sheet liquidity. GEVO RNG generates renewable natural gas by collecting manure on dairy farms and selling it into California via a marketing agent. The company received California Air Resources Board certification of a carbon intensity score of negative 339 e.g. CO2e mj, expected to yield significant greenhouse gas emissions reductions annually. For more on stocks and crypto, follow Ascencore. Thanks for watching and have a nice day.